Back to closing trades, right here in 80 now, made it to that all-time high of the day. In fact, now is gaining a good 100 points in the Nifty futures. 19,600 print is back, at least for the futures. 19,523, led by cement, led by metals, and of course, select technology names as well, which are springing up quite smartly in trade. We have Manoj Murlidharan joining in on the technicals, Vinit Wolinskar joining in on the fundamentals right now. Gentlemen, both of you, good to have you on the show. Vinit, just wanted to get
what we have seen there, but we have seen breakout on Nifty itself and the whole market as well. Manoj Murlidharan is also there with us on the show to talk to us about the technicals. Manoj, we were just speaking with another technical analyst, Rahul Sharma of JM Financial, and he's talking about how there could be 1,000 points rally on the Nifty in the month of September itself. If not 1,000 point rally, at least are you expecting a big breakout, maybe 20,000 levels?
Yeah, Rahul. So I look more from the derivative perspective, not from the technical side. So there is a lot of quantitative and FIR data that comes into this place. So what happened is this month when we started the September series, the Nifty was listed by almost 17 odd lakhs, because August started with almost 1 crore 17 lakhs and we were almost at 1 crore for September. Now the good part is this lesser position in the September series is because there was some long unwinding. I guess August was the first month where month on month the Nifty was almost a 400 odd point negative. I believe 19,650 was the previous expiry, and then we had 19,250. So the short rolls which was happening from the FIR desk, we have seen that coming in, and the FIR started with almost 50% long. So just shorting 50% of it, and the most important thing, there is a ratio analysis that goes between the banking and the Nifty. So the Bank Nifty and Nifty is at a ratio of 2.28, and every time, even last time, if you remember, I guess it was almost 35-40 days before when we came to this ratio, the Bank Nifty gave a good surge of almost 22 to 2,500 odd points. Now, banking and financials are almost 35% of the Nifty, and with lesser short rolls that we have seen month on month, we believe, yes, there is possibility, but like you said, the 1,000 odd points, that is just a statistical observation, because if you see almost 10 years down the line, every time September happens to be a positive month. The first thing we would see is a 19,650 on the spot. Now that happens to be the weighted average price of almost the last 80 to 100 days, that is almost 2.5 months of expiry where the short roll from the FIR desk is happening, because they are selling the cash market. So there is some type of reverse arbitrage which is going on. So if we close about that, and in even today's case, if you see the Nifty is added almost 2.5%, so that is a positive indication, and a fresh addition of almost 2.5% after short covering certainly opens gate. But as of now, I believe that 19,700 to 800, that might be the target. If we see further fresh longs, yes, there is a possibility of 20,200, which might be in the offering.
Higher levels is what Manoj is foreseeing on the charts. But the Nifty could rally 1,000 points within a month. That's the word coming in from Rahul Sharma as well. He also expects.
Manoj, but you were talking about how the derivatives are stacking up. But talk to me about the various sectors. The rollovers were quite strong on the likes of cement, etc. Even IT was seeing quite a bit of momentum. Do you think anything to suggest that it's getting a bit toppish out there?
See, the concept which I would like to say is there is a certain weightage every sector has in the derivative side, which is called as your market weightage to the entire market positioning that have. Now, cement as of now is almost 3%. Now, this metal that we are seeing right now, the rally started almost 80-100 days, which is 2 contracts before. Somewhere close to May, June that we saw this rally started. That time the weightage the metals had in the entire derivative segment was not more than 2.83%, which is as of now 5%. So yes, there is certain pockets where money has come in and the derivative weightage has come. I believe that FMCG cement still has more room. IT though, I believe, we might not really get a big move on that. Let's say for stocks like Infosys, 1480 to 1500 happens to be the resistance. So a better buy for stocks like Infosys, etc. would be closer to 1420. Cement specific, yes, there is a possibility. Now, we believe we have two picks, top picks from the cement, that would be JK Cement and Grasim. But I've still got for Grasim because that's a good stock. We believe that there is more momentum at almost 1830. It becomes a buy. 1910 to 1920 should be the short-term target that we have for the September series. But apart from this, I guess two stocks, but there is good derivative buying and a follow-up buying might come in. One would be IRCTC. So we We recommend buying this in the stock in the cash market and not really in the September futures. So buy it closer to 703 to 5. The stop loss should be around 694, and we're expecting a target close to 722 to 726 on that. The second would be SBI Life. I guess the last 3 days of expiry when the rollovers were happening, SBI has seen good base formation, and that was closer to 1280, though the stock is almost at 1320 now. It has a potential of almost 1360 as a target. The stock should be at least 1300 on the stock.
Two stocks that I just want to bring up, maybe the year-to-date charts for. One is, of course, Reliance. What about your ideas?
So the stocks, like I mentioned, IRCTC would be a buy. We believe that the stock has good potential. At least 728 should be the target with the stop loss close to 704. The second would be SBI Life. As I mentioned, the stock has good potential, but at least in the short term, 1350 to 1362 seems to be the target. 1300 as a stop loss.
Okay, so those are the stocks that our experts are recommending. But Vineet, just coming back to the conversation on autos as well, Maruti was very late to the game of.
Yeah, that is right. But even as you were mentioning, the major private sector banks, even except from the PSU, we are not really seeing much traction. There is some amount of short positioning in Kotak Bank, almost at 1770 as a weighted average price. So we believe there is a good 18 to 20 more rupees. So 1748 to 1750 at least. We would be seeing that in the September futures. The stop loss here can be 1780. So it could be a sell-on price as of now. But the sell is not a big one, almost 2.5%. That is where the weighted average price we believe would act as a good support of the stock.
Okay, on that note, gentlemen, we'll let you go. Vineet, Manoj, as well as Naresh, thank you so much for making time and speaking with TT now. Well, the week has kick-started on a very positive note for the